Hey there, and welcome to Real Investment News. I'm your host, Scarlett Fakar. The closing bell has sounded. The Dow closed up 222 points, the S&P closed up 33, and the Nasdaq up 94. Let's get into our last story at this closing bell. The one thing that financial strategist Lance Roberts talks about on his Real Investment Advice blog all the time is watching for signs of when to get out of the market. By nearly every measure, the markets are overbought. In his post, The Honey Badger Market, he shows how investors are all in right now. Data from the American Association of Individual Investors shows the growing split between how much money people are spending on stocks or keeping in cash. You can see that right here on stocks, keeping in cash. These lines are growing apart from each other. That was from last September, but the trend continues. Just today, analysts from Bank of America reported that investor cash allocation has just dropped to a record low of 10%. That's great when you have money, but we don't. When you look at our debt, which is represented in this red line, compared to how much we are spending, represented in this blue line, we are upside down. But this shouldn't be a problem, right? If the markets keep climbing, we'll pay it back eventually, right? So now we get to the Bank of America Merrill Lynch bull and bear indicator. This past week, investors paid $33.2 billion into stock-based funds. That pushed the indicator to 7.9. Every time it is crossed above an 8, the market dropped an average of 12%. You can see it's happened at least 11 times here, and every time it has dropped. That is a scary thought, considering we haven't even seen a 3% correction in the S&P for more than a year. Something to think about over the weekend. Thanks for watching. Be sure to follow us on Facebook and Twitter and YouTube, and see our past reports on realinvestmentnews.com. I'm Scarlett Fakar. We'll see you next week.